Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify, or wherever you listen. It's Monday, the 17th of March in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, Donald Trump says he'll talk to Russian President Vladimir Putin tomorrow to discuss ending the war in Ukraine.
US Treasury Secretary Scott Bessent says he's not worried about market losses.
Plus, DEI by stealth, our exclusive reporting on how diversity programmes around the world remain despite President Trump's reversal in the United States.
Let's start with a roundup of our top stories.
US President Donald Trump says he will speak to Russia's President Vladimir Putin tomorrow as he seeks a deal to end the war in Ukraine. Kyiv's allies have stepped up economic sanctions in recent days as the US continues to push for an end to fighting in Russia's three-year war. European leaders are concerned Trump may concede too much on Ukraine's behalf in a direct exchange with the Russian leader. Trump spoke to reporters on Air Force One.
I'll be speaking to President Putin on Tuesday, and a lot of work's been done over the weekend. We want to see if we can bring that war to an end. Maybe we can, maybe we can't, but I think we have a very good chance.
The US president added much of the discussion with Putin will be over land. The Russian leader has deflected efforts to halt the fighting as Russian troops make incremental battlefield gains. In that conversation with reporters, Donald Trump also doubled down on his tariff policy, saying both broad reciprocal tariffs and additional sector-specific tariffs would be coming on the 2nd of April.
The US Treasury Secretary Scott Bessent says he's not worried about the fall in the US stock market. At one point last week, the S&P 500 fell more than 10% from its peak into correction territory. The former hedge fund manager told NBC's Meet the Press that the Trump administration's economic plans would yield results over time.
I'm not worried about the markets. Over the long term, if we put good tax policy in place, deregulation, and energy security, the markets will do great.
Bessent's comments come as investors have pointed to the US administration's tariff policies as major drivers of uncertainty and risk-off moves.
The US Defence Secretary Pete Hegseth says strikes on Houthi militants in Yemen will be unrelenting until the group stops attacking ships in the Red Sea. Donald Trump ordered a new wave of airstrikes over the weekend, which officials say could last weeks. Hegseth says the action sends a clear message.
This campaign is about freedom of navigation and restoring deterrence. The minute the Houthis say, we'll stop shooting at your ships, we'll stop shooting at your drones, this campaign will end. But until then, it will be unrelenting.
US Defence Secretary Pete Hegseth speaking to Fox News. Hegseth says the latest strikes were also a warning to Iran, which backs the Houthis. The Houthis have responded by targeting a US aircraft carrier, and they say that operations will continue until Israel lifts its renewed blockade of aid going into Gaza.
Now, the latest economic data from China is showing some signs of strength among consumers and manufacturers. Retail sales accelerated to 4% in January and February from 3.7% in December, while industrial output also beat estimates. Here's reaction from Helen Chow.
It's not necessarily too scarily high, nor is it too scarily low. And therefore, I think that's in a very nice and comfortable range that it's lying in, so that it probably implies that further policy stimulus is still warranted. And at the same time, it is not necessarily, too weak so that people would worry immediate impact.
Bank of America's Helen Chow was speaking ahead of a briefing by Chinese officials today on a new action plan to boost consumption. The measures include incentives to raise the birth rate as well as stabilise equity and real estate markets.
The Vice President of the European Central Bank says US government policy is causing more economic uncertainty than COVID. Speaking to the Sunday Times, Luis de Guindos says the Trump administration isn't very open to continuing multilateralism. De Guindos joins other senior ECB figures who've raised concerns about volatility. Here's the Bank of Spain Governor, José Luis Escriva.
The uncertainty and the risk to the central scenario is very significant. I would say this is precisely the current situation in which the risks to the central scenario on both directions are larger than normally.
Escriva's warning comes as Bloomberg's latest survey of economists sees the ECB cutting interest rates twice more this year. Economists see the benchmark rate now staying at 2% until the end of the year, but markets are wavering. They now see 1 or 2 cuts, including a possible pause in April. The shift follows plans by European governments to significantly boost investment in defence.
The UK government will abolish more business regulators and scale back welfare spending in an effort to drive economic growth. Bloomberg has learnt that the Chancellor Rachel Reeves will discuss her plans to slash regulatory costs for businesses by a quarter at a meeting with 8 of the UK's main regulators today. Meanwhile, on Tuesday, the Work and Pensions Secretary Liz Kendall is expected to unveil plans to cut the welfare bill by up to £6 billion to encourage more people to work. That's despite Reeves dropping plans to freeze a key disability benefit after pushback from cabinet ministers. Those are our top stories. Now on the markets, the S&P 500 E-mini futures this morning are down by 0.5%, along with Nasdaq futures dropping 0.6%. Friday, though, did see the S&P 500 up 2%, the best session for equities since President Trump won election. Asian equities also rallying, the Nikkei 225 up by 1.2%. Chinese indices for mainland shares, the CSI 300 currently down 0.2% ahead of this press conference that we're expecting from Chinese leadership to talk more about plans to revive consumption in China. The Bloomberg Dollar Spot Index is largely unchanged. US Treasuries are also steady. You do have oil prices rising, though, amid growing Red Sea risks. WTI crude futures up 0.6 at $67.60. And a big week for central bank decisions, including, of course, the Fed, the Bank of England, the Bank of Japan, the Riksbank.
In a moment, we'll bring you more on tomorrow's planned conversation between the Russian and US presidents, plus a look at how many international companies are holding firm on their diversity commitments despite backlash from the White House. But another story that caught our eye this morning, it is St. Patrick's Day. Happy St. Patrick's Day to you, as I'm morally obliged as an Irish person to wish everyone that I meet today. But we have a great piece from our Dublin Bureau Chief on Bloomberg.com and on the terminal this morning, looking at how the diplomatic offensive that Ireland goes on at this time of the year, sending their ministers all over the world to take part in St. Patrick's Day celebrations, takes on extra significance this year. There's a number of ministers who travelled to the United States. We know we had the Taoiseach meeting Donald Trump at the White House last week. But this is as they're looking very nervously at the huge amount of American companies who have big investments in Ireland. Actually, per capita, Ireland has the massive trade relationship with the United States as well, the biggest per capita goods exporter to the US in Europe. So that is something that they're very concerned about. There being risks too if Donald Trump drives some of these companies, particularly in the pharmaceutical space, to move some of those investments back to the US. There are communities all over Ireland because they aren't just based in the capital, they're in small towns as well. Worried about what that might mean for them. Yeah, I mean, look, many people think that Micheál Martin did reasonably well, of course, in that White House meeting with President Trump. But as you say, it's the tax haul that Ireland has managed to take from or received from US companies that is perhaps a source of difficulty. But then you also have to think about the alcohol industry. You know, President Trump threatening those 200% tariffs on EU alcohol products. That would also hurt Irish whiskey. But yeah, I must say, on a lighter and brighter note, happy St. Patrick's Day to you too. Thank you, Caroline. On behalf of my nation, I accept that. Yes. Let's go back, though, to our top story this morning and this planned conversation that we've been told about. Donald Trump will speak to Vladimir Putin tomorrow, he says. Our head of Middle East, North Africa and Russia coverage, Stuart Livingston-Wallace, joins us now for more on this. Stuart, good morning. What will Donald Trump want to achieve from this conversation with Vladimir Putin?
Yeah, morning, Stephen. I mean, I think what you would like in an ideal world is a clear and unambiguous statement from Putin that he backs this proposed 30-day ceasefire and then sort of largely seems to be falling into line with what the US and Ukraine and others have already agreed to. Now, quite whether he actually expects that to take place is kind of interesting. And if you look at the words or what he said on Air Force One, this morning, for me anyway, they are quite carefully worded. There's some maybes in there and there's some I thinks. And again, we're probably reading far too much into it, but it does, at least on the face of it, appear that Trump, I think, is being quite cautious about over-promising from this particular conversation. But, clearly he's bullish, he's hoping for the best. But there does seem to be some hesitation there about expecting a final outcome tomorrow.
Other observers, European leaders, deeply sceptical. Will Vladimir Putin be willing to engage on these issues, on the ceasefire itself, do we think?
It's very hard to tell. I will say the following, which is that Putin is obviously a very seasoned negotiator and very careful about what he's offered up. And what's been interesting about this particular round is that, at least on the face of it, it appeared like the US had sort of conceded on some key points to the Russian side pretty much before the negotiations had started. And slightly oddly, it felt like that had rather taken the Russians aback. They couldn't quite believe what they were sort of hearing, and I suppose to some extent were a little bit suspicious that they were sort of, perhaps being fooled in some respects. So I think you should anticipate more of that same sort of level of caution. I mean, they have set out what they say are red lines, which is, specifically that Ukraine, there must be a perpetual pledge that Ukraine will never join NATO, there will never be NATO peacekeepers on the ground, that the four oblasts that they unilaterally annexed in 2022 would be recognised, and so on and so forth. Now, quite how many of those they would be prepared to concede on or find some sort of halfway house on will remains to be seen. So they are keeping their cards very, very close to their chest, really.
Stuart, another story that you've been watching this morning as well has been the developments in Yemen, the US ordering a new wave of airstrikes on Houthi positions over the weekend. How significant a move is this by the US?
Yeah, I think it's really, really interesting, and really for two reasons. Number one, I think the US has absolutely no intention of putting boots on the ground in Yemen, and I think without that, it's going to be virtually impossible to dislodge the Houthis. So, to me, at least, it looks more like a signal to Iran, because again, the Houthis, while quite a well-organized militant / terrorist force, nonetheless are dependent on Iran for their advanced military equipment, for intel that comes from these ships floating off Yemen. And so that, to me, looks like the US signaling to Iran, as we've seen over the last several weeks, that they need to dial things back. And it is an interesting change there of stance, because Iran, it appeared, had told most of its proxies just to keep their heads down when Trump came into office. That appeared to take place. Now, what's interesting is, can they keep the Houthis on a leash, or are the Houthis now going to be operating independently, at which point, Iran has a real problem on its hands.
Stuart, thank you so much for being with us this morning. Our head of Middle East, North Africa and Russia coverage, Stuart Livingston-Wallace. Thank you.
Donald Trump's dismantling of diversity, equity and inclusion in the United States is making waves at companies in Europe, Asia and beyond. But companies outside the US have their own domestic diversity goals and regulations, which are non-negotiable. Joining us now with our latest reporting on this subject is our EMEA Equality Editor, Siraj Datu. Siraj, good morning. How is the DEI rollback in the US affecting companies then outside of the US here in Europe?
Good morning. Having spoken to companies, DEI professionals and lawyers who work in the field, the general consensus is that the biggest impact is being felt on large multinationals that have got a presence in the US. So companies that have a federal contract, for example, are particularly impacted because they're targeted by Donald Trump's executive orders specifically on what he called illegal DEI. So what we're hearing is that companies are making big changes there, whether that's broadly removing workforce representation targets or minor tweaks on their websites. But from all our conversation, companies, for the most part, are really just making these bigger changes in the US, and then elsewhere they're trying to stick to the goals that they had, or at the very least, they are not making any changes to their initiatives.
Because in a lot of Western countries, regulations also tend to focus on women rather than on ethnic diversity in itself. But a lot of countries have embedded equality and diversity in terms of regulations. So there are sort of conflicting regulatory signals here, surely.
Exactly right. So France is a good example. They introduced gender quotas for boards as early as 2011, and now companies have a mandatory quota for women to make up 40% of boards by 2029. Then you have places like the UK and Australia where companies have to go through employee and compensation data to publish gender pay gaps. The UK government has indicated too that they're going to extend this reporting to include an ethnicity and disability pay gap element too. So what we're finding is that companies have now been saddled with compliance and regulation in lots of places, and much of that is being placed with DEI teams. So another big concern for companies is that in the EU is that there's a pay transparency directive that could affect many companies from next summer. And if there are large pay gaps in the same roles, firms from next summer will have to publish an action plan on how they plan to tackle it. So, there are lots of things going on, and there are definitely divergences in how companies are going to have to operate.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.